Welcome to the Rate Update with Dan Frio, and I am Dan Frio. Today is December 2nd, 2020, and yes, I am still in town, so I greatly appreciate you guys commenting yesterday. My father-in-law passed away due to some illnesses, and this will be my last video for this week, and then I'll be back first thing Monday to get back at it. So don't go away. We're going to go over what happened with rates today. See you in a minute. The numbers are still defying me, and I'll explain why. Rates, they really haven't changed today, but the stock market is being resilient. Bonds or mortgage rates are doing okay, but the economy is bad. Unemployment, I'm going to show you some numbers that came in. Employment numbers for November were bad. What's causing everything? I mean, I know the markets always project out 6 months to a year or whatever. So I get that, but the numbers are so out of whack. I mean, every day we're hitting a new record high on the Dow. And are we going to be at record earnings for everybody next year, 12 months from now? I don't think so. But that being said, let's get on to where the headlines are, and then we'll get to rates. So here's the headline numbers. U.S. hiring slowed in November due to the corona surge. So I keep saying, or my predictions are, is once the vaccine comes out and everybody gets acclimated to things and we get past the flu season and spring hits, we're going to have a complete reversal of everything, and everything's going to be, not everything, but the economy is going to get back in a good groove. We were in a very good groove right before this happened in February, March. And it basically almost collapsed the whole system. So that's the headlines. So what's going on right now with rates? So mortgage-backed securities are up 8 ticks today. What's that mean? Basically nothing. Rates are going to stay stable. For those that don't know what this number is, this is actually what's happening to the price of a mortgage-backed security bond. The bond is the biggest piece of the puzzle, or the biggest component that creates the mortgage rate. Okay, so I'm going to get rid of the 200-day moving average and just go through some things with you. So this is one of the things, just one of about 15 things I monitor on a daily and weekly basis to try to predict and help you guys pick the perfect timing to lock your loan. So that's what we're doing on this channel. So what I monitor this, and this is giving me basically tick by tick by tick on what's happening with mortgage rates. And then we also go to the economic calendars and other things that I'm going to show you as well. But one of the numbers that we follow, like I said, is the employment numbers, inflation, logistics or transportation of goods and services, and a whole slew of things. So, but let's concentrate on this chart right now. So if we're just looking at technicals, this is basically what's going on to the price of a mortgage-backed security, okay? This is an inverse relationship of what's going on with rates. So when you see this going up, rates are coming down because we're paying more for the bond, and thus we pay more and the rate comes down. I'll explain that for you. How bonds work is the higher you pay for a bond, the lower your rate of return. Quick little math for you. I buy a bond that at maturity next year is worth $100. Today I pay $50 for that bond. So I give you $50. Next year when it matures, I get $100 back because my bond matured. What was my rate of return? I gave you 50, I got back 100. I doubled my money, so I got 100% return. Okay, so that's if I pay a lower price. Let's say I pay a higher price, and I'll exaggerate this thing just to make it as simple as I can. I pay $100 for that $100 bond. So I give you $100 today. Next year when it matures, you give me $100 back. What's my rate of return? 0. So you can see at $50, I paid less. My rate of return was 100. When I paid $100 for that, my rate of return was 0. So the more money we pay for a bond, the lower the rate. Okay, so we love when this number goes up. We love when people are paying more for the bond because of that. So we'll go back to my chart. So we had a nice little run here. This is within the last couple weeks. But where we should be trading in a normal market, nothing is normal, hashtag 2020, but where we should be trading is right about in here, right in the middle. And why do I say that? Well, a few different things. The Fed is trying to, I won't say manipulate it, they're trying to control the variances or the spikes and everything. They're trying to calm down the system, I guess is the best way to put it. So they jump in or jump out on a daily basis and they monitor how much they buy of this mortgage-backed security, of this bond, to help stabilize the market. Okay? So they've been doing a fantastic job. If we go back for the last 6 months, they've been doing fantastic. They've been staying right in this range right here. In the last couple of days, we have a little bit, I'll say a little bit more, a lot of euphoria in a lot of the markets, and things are overheating. So where we should be trading is right here. Where I expect to be in next week is right in here. That means you might be saying, well, Dan, that's not good news because that's coming down. If that's coming down, the price, the rate's going to go up. Yes, but it's not as, you got to think of, these are hundredths of a percentage. So it's not a very big move. The difference between here and here might be a difference of 0.125 in your rate. So it's not as astronomical as you think. So this is the chart of the last quarter. This is where we've been the last few days, and you see it's a little bit crazy, but it's steadier than you think. Okay, and I'll show you that here. Let's go back a year. Now that's a crazy chart. So you can see right here, look how condensed it is right there. I mean, it's really minuscule when you talk about variances. So now let's get on to what happened in the market today. So my market wrap is the Dow ended up 59 points. You can see the ADP numbers, and we just went through that here a second ago with the numbers. It wasn't good. So employment is bad. Interest rates are stable. So basically the news that came out today, I'll go to the economic calendar, was ADP payroll, and it was down pretty big. With this normal number, you would expect the stock market to tank and the bond market to rally, because people rally to safety. Safety is bonds. Speculation is stocks. Okay, that's how a lot of investment work. The rest of the week, we're just coming out with employment numbers and hours worked and so forth. This usually have somewhat of a correlation with the ADP payroll. The government payroll numbers come out on Friday, but they should kind of mirror the ADP numbers. Sometimes they do, sometimes they don't. So that's the information there. This newsletter I'll be posting here shortly. Some good news out this week was the average conventional loan size went up pretty dramatically this past week. And then also today they just came out and said FHA loan limits are going to go all the way up to $356,000. You can see that right here, and I'll try to zoom in on that. That is great news for those that were on the border of getting a either conventional or FHA loan versus a jumbo loan. Okay, and we're very much known for our jumbo program. So if you need a jumbo loan, let me know. So what actually happened with rates today? Well, I post this chart every day. It's the rate indexes for a 30-year conforming loan, a 30-year jumbo, 30-year FHA, and 30-year VA. You can see based on the colors here where we started basically the year and where we came all the way down to today. Fantastic. So the average rate right now for a 30-year conforming rate is 2.8, jumbo is 2.91, FHA is 2.84, VA is 2.41. Now, guys, this is an average. So if your credit scores are a little bit lower, you might have a little bit higher rate. You're pulling out money or pulling out cash, you might have a higher rate. There's a whole bunch of variations that could cause this rate to vary. These are just a generic number, and I'm going to show you my generic numbers here in a minute, but let's just go over what happened in the last day, week, and so far this year. This week, a one-day delta. One-day delta means the change since yesterday. The change since yesterday is the rate is 2 basis points higher. 2 basis points is 2/100th. So this would be a 0.02 increase from yesterday. Okay? 3 basis points means a 0.03 deduction since yesterday. So rates dropped a hair, probably not enough to even really affect the markets. But what you want to notice is over here, rates are down almost a whole percent across the board in all these categories. So if you closed a loan prior to March 18th, 2020, you should look at your mortgage statement and send me a copy of that thing, and let's look at some numbers on what those numbers could do for you. So let's go over where my rates are now. When we're breaking down rates, you noticed on what we just went over was conventional, jumbo, FHA, and VA. Okay, so those are basically what I want to go over with you here. And I added a couple different variations to mine, such as USDA and some boutique jumbo programs that we have. So let me go over, just explain this to you in just briefly. My conventional loan, what it consists of is the makeup of this data is a $250,000 loan on a primary home, means you live there, and it's a single family home. The rest of the criteria is here's your credit score and here's your loan to value. Your credit score or your loan to value basically is the loan amount divided by the value of your home, okay? And then there's two caveats that I did on this. Purchase or rate and term. So if you're buying a property or you're just looking to refinance your current balance to a new 30-year term. That's this criteria here. If you want to pull out cash, then this is your rate down here, all right? So we had a little bit of a differential here. Our cash out program, actually the rates got a little bit better. So let's go over where my rates are today. Based on this criteria right here, 740 credit score at an 80% loan to value, my rate's 2.75. Cash out, kind of the same criteria, but at a 75% loan to value, you're at 2.625. So those are my conventional financing rates. And again, your rate might vary from this because your criteria might be different. You might have a 720 credit score, 700 credit score. Your loan to value might be 75, might be 85, might be 90. Your home might not be a single family home. It might be a condo. It might be a 4-unit building. Okay, all those have variations to it that will make adjustments to your rate. Okay, so the next thing we want to look at is that was my 30-year term. My 15-year term, sorry, got a new mouse and it is flying. My 15-year term is same thing, purchase, rate, and term. You're just looking to refinance your current balance. On a 15-year term at 740 credit score at 80% loan to value, 2.375. I cut off the 5, it skewed all my numbers. So that's what my rate would be on a 15-year term with this criteria. Again, it might vary if your information varies a little bit. If you're looking to pull out cash, my rate is 2.625 on that on a 15-year term, okay? So let's get to the government programs. You noticed on what we went over previously, there was VA and FHA, but I'm adding USDA because we do quite a bit of USDA, and believe it or not, we do quite a bit of it just outside of San Diego. And I'm going to start running some ads out there. And if you know anybody in the San Diego area or outside the outskirts of that, they might want to check and see if their property is eligible for USDA. We have a client right now buying a $750,000 house, USDA with 100% financing, no money down, 2.375, 30-year fixed rate. Are you kidding me? No, we're doing them. So my USDA, you'll go to 100% financing, 740 credit score at that. You can go all the way down to a 600 credit score to qualify, just so you guys know. But purchase or you can refinance that USDA loan. Today my rate is 2.375. VA, if you're a veteran, God bless you. Thank you so much for what you did or you're doing. You can finance 100% financing on a refinance or purchase with a 740 credit score. Those also, we go down to a 600 credit score. My rate today on that is 2.375. FHA, this is one of the lowest down payment programs there is. You need 3.5% of a down payment. That's what you got there. 740 credit score if you're looking to purchase or refinance as well. 2.375 is your rate. Now to the nitty gritty. Here's some things that we're known for. My jumbo loans up to $3 million. 780 credit score if you're looking to purchase or do a refinance. 60% loan to value, 780 credit score. That rate is 2.875. No points, 30-year fixed. No, nothing weird about it. We're not trying to bait and switch you. Promise. My super jumbo, goes up to $5 million. Look at this, same thing, same rate. Are you kidding me? A jumbo loan under 3%. Wow. Then we have this program, and I had a lot of feedback on this in the last 2 days. If you're in one of these counties in California, you can buy or refinance up to $1 million at 95% loan to value, 780 credit score at 3.5%, no points, 30-year fixed. Those are my rates for today. So now what? You're like, Dan, I love that stuff. Now what? How do I get you? Well, give me a call. I'm going to go over that with you in a second. What most people do is if they're in the process of building a house right now, buying a house, refinancing, if you apply to at another company, they have to issue you what's called a loan estimate or a fee worksheet. Please send it to me. Get a second opinion. The worst thing is you're going to waste 10 minutes of your time copy and paste and doing whatever and sending me that data. I'll get back with you probably within an hour or two and say, here's what I could do. 99% of the time, I'm going to get back with you and have a lower rate or lower fees, okay? And I'll leave it up to you at that point. I'll say, you know what, I can help you. I'd love to help you. If you go online right now and apply, I'll lock you in and get you moving. What I do most cases is when you send me that data, I'll write all over it with a red pen so you have something in writing from me. And as long as the information you provided me, like the background, your credit score was and all that other stuff, if it meets what you're telling me, you're golden. So I don't get you a lower rate and charge you more in fees. Nope. I don't get you lower fees and a higher rate. The reason why I would make a move is I can get you a lower rate and lower fees. So if we can do that, what do you got to lose? So here's the best way that I ask people to do it. Or let's say too, if you haven't really started anything, email me a copy of your mortgage statement and just say, Dan, here's what I got. What can you do? And I'll respond back to you and give you a good idea what exactly we can do for you. So how do you get this ball started? How do you get a hold of us? Well, the best way is to go to therateupdate.com. Down here is an 800 number. Either myself or one of my 12 mortgage advisors will answer. Everything goes through me. So before they get back with you, I'll have reviewed the rate with them, the program with them, the fees with them, everything. So even if you're working not with me, but with one of my mortgage consultants, I still have a big role to play in this process. If you want to, just go to therateupdate.com. You can apply now, top right. You can hit these tabs. These are little funnels or questionnaires that you walk through, answer. It gives us that details so then we don't have to call you and pick your brain for a half hour. Or you can just get a free quote. So that's that. Another tool that we just introduced about 2-3 weeks ago is this. It's a free service for you. This is probably the number one home valuation system that I've ever seen ever. It is awesome. It'll pull up all the information about your house, all the public record information about your house. You'll be amazed. And I'm not tapping into anything illegal, but it'll tell you, okay, Mr. Smith, your house at that address is worth this. You have a lien on it worth this. Here's when you took it out, blah, blah, blah. And it will give you ideas if you refinance, how much money you would save, a whole slew of data. And it's all public record information. So that's the best way to reach us. So I hope you like what you see. If you do, all I ask you to do is just a couple things. Please give me a thumbs up so the algorithms through YouTube can get out to more and more people so we can help more and more people. The next thing is please hit the subscribe button down below, hit the bell, so every time I do post a video, you get an alert. Might be something you really you're interested in or not. If you are, watch it. If you're not, at least we tried. So that is it for today. Again, I apologize. I won't be here the rest of the week. I have to head back and for my father-in-law's funeral. I greatly appreciate you guys, all the kind words that you guys reached out to me yesterday. And I just want to say thank you. Because of you guys, it allows me to do what I do. So God bless. Take care, and I'll see you guys next week. See you then. Bye-bye.